Buffett says he reads 500 pages every day. That's how knowledge works. It builds up like compound interest. In this video, we'll first briefly look at what an annual report is, and in part 2, we'll look at step-by-step how Buffett approaches reading an annual report to find great investments using Microsoft's report as an example. Part 1. What is an annual report? Buffett's daily reading consists of annual reports, which he says are vital for any investor to understand a company's competitive advantage. They are a required filing which public companies submit to regulators each year to disclose financial results, operations, risks, and governance practices. It is management's explanation of how the business was run over the past year. Buffett views it not just as a financial document, but more like a business narrative. He's looking for quantitative factors, which are numbers and data from the financial statements. But Buffett also looks at qualitative factors from the annual reports, which you might be a little surprised by. Qualitative factors are descriptive text information. They can include the chief executive officer's letter, management discussion and analysis, notes to financial statements, and corporate governance. Qualitative factors help Buffett assess the owner's integrity and perspective on running the business. Don't worry if it sounds like a lot. We'll go through each section of the annual report step by step so that you can understand them. A typical annual report includes many core sections. To start, there is usually the chief investment officer's letter, outlining performance, priorities, and long-term direction. Then there are financial statements, including the income statement, balance sheet, and cash flow, which provide a factual record of financial activity. Next, we have the management discussion and analysis section, which explains why those numbers look the way they do. And the disclosures around risk, compensation, controls, and oversight reveal how the company is governed. Together, these sections offer a complete view of the business, how it makes money, how it is managed, how it is financed, and how honestly leadership communicates. Buffett says that quarterly filings provide updates, while annual reports offer a much deeper understanding. He mentioned at Berkshire's shareholder meeting that he spends 45 minutes to an hour reading an annual report. And if there are 8 other competitors in the industry, he would read every one of them too. By reading every competitor's annual reports, he can better understand the market position of the company he's looking to invest in. So, in total, he says he would take around 9 hours if he read the annual report and all 8 other competitor reports. But how come Buffett places so much emphasis on annual reports? To help find out, let's look at how he analyzes annual reports to find great investments. Part 2. How Buffett approaches reading an annual report. Buffett does not read annual reports randomly. His approach is methodical. Buffett and Munger begin with companies they believe they can understand. From there, they ask themselves whether management would communicate the information they would want if they owned the entire business. Before touching the financial statements, he reads the business overview to understand what the company actually does. What does it sell and to who? Why do those customers choose this company over others? If the business model cannot be explained clearly, Buffett stops. He has long maintained that investing without understanding the business is speculation and not ownership. Next, he reads the chief executive officer's letter and the management discussion, which help reveal how leadership thinks. Buffett listens closely to the tone. Are challenges acknowledged honestly? Are explanations clear and consistent? Do executives explain the business as operators or promote it like salespeople? He then reads the shareholder letter if it's available. Buffett's letters are incredible for their clarity, and he's looking for similar traits in others. Honest reflection, simple language, and accountability are more important to him than positive enthusiasm. The tone often reveals more than numbers. We'll look at Microsoft's 2025 annual report as an example. And as you can see, we have a shareholder letter written by Satya Nadella, who is the CEO. Buffett said that when executives are open and speak directly about how the company operates, it dramatically increases his confidence in the investment. Honest communication matters deeply to him. Not clever wording, but rather clarity with integrity from management. Next, he goes straight to the risk section. Companies are required by law to mention risks, which makes this one of the most revealing parts of the report. Buffett looks for customer concentration, exposure to volatile costs, regulatory risk, and reliance on favorable economic conditions. Risk that can be understood can be evaluated. Risks that cannot be explained should be avoided. Here you can see Microsoft have clearly outlined risks such as foreign currencies, interest rates, credit, and more. Governance and risk disclosures help Buffett assess the potential downsides. Leaders who openly discuss risks usually understand their businesses better than those who minimize them. Clear disclosure, sensible incentives, and alignment with shareholders lead to long-term growth. Next, the discussion and analysis is one of his favorite parts. Here, management explains what and why something occurred, and what to expect going forward. Buffett reads this section carefully, checking whether explanations align with the data. Consistency builds credibility, while excuses erode it. He takes this section very seriously and asks questions like, is the operating history consistent? Are management making excuses? Are they thinking about long-term value creation instead of going for a short-term stock price increase? For Microsoft, their discussion and analysis, which includes highlights from 2025 compared to 2024, is shown here. The communication style itself becomes a signal. Managers who rely on buzzwords, vague optimism, or selective storytelling raise his caution. Since management quality compounds over time, these signals matter enormously. Only after understanding the narrative does Buffett dig into the financial statements, which help him to evaluate financial strength. Buffett focuses a lot on revenue growth, operating margins, returns on capital, debt, and cash flow. He compares these figures over many years against competitors to determine whether a business looks strong, as you can see from Microsoft's income statement. Buffett never looks at a single year in isolation. He studies trends across many years, focusing on stable or improving margins, strong returns on capital, and businesses that generate cash without requiring heavy reinvestment. We can see in Microsoft's report, they also provide information from 2024 to compare the balance sheet performance. After the balance sheet, we can also see the cash flow statement here, showing information from 2024 and 2023, which allows us to compare multiple years. By the way, if you're learning something valuable, please consider clicking the like button and subscribing. Thanks. Companies that earn high returns while needing little additional capital are especially attractive, which is why Buffett has liked insurance businesses such as Geico. He then reads the footnotes, where accounting assumptions, lease obligations, litigation risks, and adjustments are disclosed. Many investors skip this section, but Buffett never does. The footnotes explain what the headline numbers hide. Here we can see Microsoft have notes to their financial statement regarding accounting policies. In fact, their notes section consists of many subsections for earnings per share, other income, goodwill, debt, and many more. Next, you'll often see an auditor's report section, which outlines the basis of opinion and critical audit matters. Finally, he watches for warning signs, growing profits with weak cash flow, constant adjusted earnings, buybacks funded by debt, promotional language. Put simply, Buffett prefers clarity over cleverness. By the end of the report, he is not in a rush to make a decision. Instead, he's building a mental model of the business and reads competitor reports, as businesses do not exist in isolation. Comparing margins, strategies, capital allocation, and risk exposure across an industry reveals who is gaining ground and who is losing it. Buffett has said, the goal is to gather enough information to make an intelligent judgment, and that the annual report is where that information lives. So, what is Buffett really trying to learn? He's not searching for a single metric or signal. Instead, he's asking deeper questions. How exactly does the business make money? Will it still be strong 10 years later? Are management behaving like owners and have shares in the company? Does the business have durable competitive advantages? Those advantages, which he often calls moats, may come from brand strength, scale, cost advantages, intellectual property, or network effects. Their durability determines long-term value. If the answers are clear and convincing, the company earns a place on Buffett's watch list. If not, he simply moves on. Here's why this approach works. Many investors avoid annual reports because they are long, technical, and mentally demanding, but their avoidance by other investors can be an edge for you. Buffett did not build his success by reacting quickly. He built it by thinking deeply. Reading hundreds of annual reports each year allowed him to see what others missed, not only because he was smarter, but also because he went through more pages. For investors willing to slow down, annual reports remain one of the most powerful tools available. Next, let's look at Buffett's checklist. Investors often overcomplicate analysis and miss what truly matters. Buffett's approach is grounded in simplicity, clarity, and long-term thinking. Here are the financial and business-related checklist points from 1 to 8. Firstly, do you understand the business and have you read the reports of the major competitors? Next, we look at if there is a clear competitive advantage or moat. Pay close attention to capital allocation decisions. Assess whether share repurchases were at sensible prices as high-quality businesses buy back shares only when it makes sense to do so. Next, are the profit margins, earnings growth, and return on equity good enough? Is the business financed conservatively? Strong reports clearly outline business risks, so avoid companies that highlight only good news. And lastly, checkpoint 8 is prefer straightforward accounting with minimal adjustments. Next, we have Buffett's management-related checklist points. Firstly, management should show integrity and write clearly, so remain cautious of corporate buzzwords or salesman-like language. Next, are the company leaders significant shareholders? Is management showing rational behavior consistently over the years? Have you analyzed the annual reports from the closest competitors? The report should deepen your understanding behind the company. And honest reports discuss difficulties, not just achievements. Look for direct explanations of performance. Determine whether leadership has a priority for long-term value creation over a short-term stock price rise. And the 8th management-related checkpoint is compare reports across years to check whether management delivers on promises. For Warren Buffett, annual reports are not paperwork. Instead, they are the foundation of intelligent investing, and those willing to read them carefully gain a better understanding of the stock. Buffett says an often overlooked area of stock analysis is the management analysis. What may have surprised you is the importance he places on learning about the management of a company. Buffett deeply values management with integrity, shared shareholder interests, and long-term rational thinking. After going through the annual report of a company, he said in his Berkshire shareholder meeting that he will do the same thing all over again for the top 6 to 8 competitors. Doing so helps him gain perspective on the position of the company he's looking to invest in. Also, occasionally Buffett may find after reading the report of a competitor that their company is a better stock to invest in. From checking competitors' reports, he can better understand the industry margins, market share, and industry trends. For example, with Microsoft, we would also want to look at competitors such as Google and Apple. A downside to the annual report is that it usually only includes information from the last 2 or 3 years for the financial statements. After reading the annual reports, Buffett makes an estimate of the intrinsic value and checks if it's below the current stock price. However, if the stock price is far higher than his intrinsic value estimation, then he'll avoid investing into the company. If you find an annual report you like, I would strongly suggest looking deeper into the history of the company and checking the financial statement reports from the last 5 to 10 years. You can use TradingView to easily find information like this, and I recommend them. If you are confused about something we went through, feel free to leave a comment, and I'll make sure to reply. Also, if you learned something, please consider clicking the like button and subscribing so you don't miss out on more videos like this. You'll like watching this video next. Thanks for watching.